Hey guys. Yeah, I've been watching the fires over there in California.
Oh, that's
I grew up
terrible.
around the Salinas area, and boy, I tell you, it's to have some of those old places that were one grew up at
Yeah.
in burning up is just it's absolutely amazing. So come on.
Did I ever tell you my mom was born in King City?
No.
Yeah.
Grew up at
In 1910.
burning up. Okay, we are up on YouTube, King City. Yeah, we used to go down to the fair in King City every year, and it was a good time. There we go. And we are now live. I just want to say hello, everybody. This is Dennis Wilborn, Active Trend Trading. Welcome, the founder of Active Trend Trading. Welcome to our session today for how to make money trading stocks. We've got a jam-packed 15 to 20 minutes that we're going to be going. Dr. Steve's joining us from downtown Honolulu or out towards University of Hawaii. Just a reminder that what we do is for training purposes. And here's where we're sitting. We're going to just jump right into it. We've basically, I'm very pleased with it has been a stock pickers market so far this year, and I anticipate it to continue on. And basically just these really quick little swing trades that sometimes last a week, sometimes last 2 weeks, sometimes last just a couple of days. We've also had a couple of issues with just getting round tripped, but we've had some really good opportunities to refine our entry techniques. And so that's been excellent. And the premium members and the top 5 members of Active Trend Trading have been benefiting from that. Earlier today, here's where we were sitting. The Dow is still down for the year. The S&P is up slightly, about almost 5%. The NASDAQ is the index that's running away and leaving everything in the dust. And then the Russell is also down for the year, showing a little bit of weakness, but I'm going to be talking about that specifically. Active Trend Trading up 47% for the year. And compared to the S&P, we're up 43%. So I'm very, very pleased with those results. And so let's just jump in and start taking a look at the indexes. Now, what I did today is I basically want to take a look at the daily, which is over here on the right. And as you see, it has hit its head multiple times. We started this congestion zone up here at the 100% retracement of the move that we had back. I think this was back in the March, February timeframe. When was this? This was, last part of February. And then we went into the correction, fell out of the sky, and price actions have gotten right up there, bumped its head, bumped its head, bumped its head, went above it slightly. And so we'd have to consider for the S&P, this being a false breakout, because you see on the daily chart, we did not get a close above that 100% retracement. So there was no breakout. There was it's like Pinocchio stuck his nose above there and it got whacked off. And so he pulled his whole head, nose, and the whole 9 yards back. What do we have going on here? And I'll show you. Basically, on a weekly chart, we've got some negative divergence. A little bit of negative divergence here on the market forecast. What else is of interest? And here's one of the things that I find very interesting. Yes, we have the 100% retracement of the move down to move back up, but the market is kind of stalling out. Now, it is not busting out here as fast as, or as with as much power as we would like. One of the things I found interesting, now I don't normally do this for this webinar, but I want to throw a Fibonacci on here. You see the Fibonacci from the retracement from the high to the low, and it's gone up here. See how it stopped here at the 618 and kind of danced around a little bit. It broke through, went on up, had a nice move. However, if we take this move right here, this high to low, what's very, very interesting is you see, let me see if I can blow that up a little bit for you. As you see, this the 161.8, which is the extension of the expected move off of this down move here, also coincides with 100% retracement. That can be partial explanation of, it's kind of like a double level of resistance. And so it provide some clarification and understanding for what's been going on with the market. Why has it been acting like it has? That's one thing that I really like about the fibs is basically the fibs tell us, show some hidden things. And when you get these doubled up fib fib locations like this, that tells you that there's extra meaning on that particular level. Now, if we break out, yeah, watch out below, not watch out below, watch out above, because we should get a nice move to the upside. And we'll measure that out. And I measure that out for the premium members and the top 5 members on a regular basis. So that's what's going on with the S&P. Again, it is struggling to make it and break out above the 100% retracement. Let's take a look at just the Qs. The Qs are basically following the NASDAQ pretty well. It is the strongest of the movers, and basically it is just really taken off here. One of the things we can do a similar type thing. If I take this move from here to here, look where the price action on the Qs has made it to. This 1618 extension, that is a natural, kind of harmonic area where you would anticipate prices stalling. So could we anticipate prices stalling right here and doing a pullback, not breaking down and going into a big bear market or anything, but doing a pullback at least to what moving average is it respecting? Primarily the 20 and the uptrend line. Get a pullback into here. What are some of the other things that we could basically look at that would support the theory that we could get a pullback back into that moving average? Well, a big one is we're entering into September. What's the historical aspect of September regarding how it performs on a historical basis? Typically, August and September are your weak months of the year, and therefore that would basically be additional evidence that potentially we could get a pullback. Again, am I anticipating a total breakdown and a move? As long as this uptrend line stays intact on the NASDAQ, we anticipate price action to continue in the upward movement, upward direction. As long as that is not voided, that moving average right there. Could we anticipate a pullback into that area? Yeah. I mean, right there, the breakout area, about 275, great area to be in. Then last but not least, our buddy IWM. If I were to be looking to trade something to the downside of the indexes, and some people like to trade pairs, you could pair up the IWM with the NASDAQ. And when the NASDAQ is going up, you could literally short the, short IWM. And, that's one way to trade it for people who like to trade pairs. If you don't know how to trade pairs, just look at this. Weakness, weakness, weakness. We've had basically the TSI rollover. We've had the market forecast roll over and start downward in the downward position. The 8-day moving average is rolled over and is now pointing which way? Down. The 20-day moving average is basically gone flat. We break below the 20, we're probably going to go back here and test about the 148 level. If that is in fact the case, I'll be looking at trading something like TZA, or I'll be looking at trading some kind of a put option to the downside with IWM. Again, this is the weakest. The NASDAQ is the strongest. What do we see over here on the weekly chart? A little bit of a shooting star from last week, followed up with a bearish engulfing. Our TSI has not totally rolled over here on the weekly chart. Neither has our market forecast. And for some of you who are familiar with the market forecast, you may be going, what has Dennis done to the market forecast? What I did was basically I just changed the long-term momentum line to a histogram. And the reason I did that is because I find sometimes just the histogram gives a better visual, so that if I'm triggering off the TSI and the histogram, there's my trigger for the TSI. Here's my turn up, basically a move back up on the market forecast. And as you see on a weekly chart, works really well. On a daily chart, works really well. And you can then plan. And once the histogram starts pointing up and the TSI starts pointing up and price action gets above and the moving averages are pointing up, you've got 3 things in your favor. So something you can learn. If you want to learn more about that kind of stuff, hey, become a premium member of Active Trend Trading and we'll get you all set up. And so, Eric, you said worst. I don't know what that worst is about. And so yeah, Steve, San Jose is flanked by fires. Yeah, I know. We've got people up in Marin County. You got people over by Brentwood. Yeah, the fires are, yeah, worst month for trading. Absolutely. The month of September normally. But the thing about it is remember and be patient. While September may be a bad month, we don't want to force trades because September provides us some of the best setups for our longer term trades to finish off the rest of the year. The October, November, December traditional rally, that's what it gets us set up for. So Steve, what do you think? Mixed market?
I agree with what you said, although I think the fact that we're taking so long to not roll over and to kind of stay sideways just under the test of the prior highs at least in the S&P, I think it bodes very well for the market. We just need to break out, and when we do, I think it'll be very powerful. I'm not expecting a major pullback or a serious pullback of any sort, because those happen pretty quickly when they occur. You don't bounce around and into resistance and then break sharply.
Yeah, I agree wholeheartedly. What I would anticipate, like I said, you said not a major pullback, but just going back to these last few bounces,
right.
Where did it pull back? It pulled back to the 20. So, right. So oftentimes what you'll see is you'll see the price action need to pull back to a level of support right. That allows it to basically, get some, what do they call it, kind of energy, some
momentum.
Momentum, or the spring tightens. And so you have a level of energy, and then pow, it breaks up, then it will break up through that. So that's the option. So, hey, what do you want to take a look at? I understand you want to look at.
I don't have too many setups, but PFSI, PennyMac Financial, is looking pretty good. And it's actually looking good in the face of weakness in the financial sector.
Okay.
So it's holding the area of the 20 moving average. And I think it's poised to break, it's a pullback in a definite powerful uptrend, and I think it's time to get on board right now, or even wait till Monday to get above. We can get price action above the 8 EMA.
Okay, I like that. Yeah, It's almost, well, it's sitting right at the 20. So
Right.
yeah, I like that. I would say, I would look for, like I said, me personally, I would look for a nice move, cross on the TSI, the daily,
Mhm.
and on the momentum for this to give me one tick up.
Right.
And by that time, we'll probably close a little bit above the 8, and
Right.
then just the pullbacks back to the 8, jump on it and run like a big dog.
Right.
Yeah, I like that,
Yeah.
because the move back up to the upside, oops, let me get let me get a drawing here. There we go. Your anticipated move back up to the upside could be, yeah, a good
Pretty
14,
nice.
yeah, 14% or more.
Yeah.
I like it.
Yeah.
So thank you, man. And so
Okay, you're welcome.
I want to throw one out. I don't know if you're watching this one or not, Steve. You may be CHGG. I know you have in the past.
Yeah, yeah. I just got out of it, actually.
Okay.
But
This is
I'm
also,
keeping an eye on it.
yeah, this is looking really, really good. It had a pullback back into the 34-day moving average, close to the 50. And now we're getting a move back up above the 820. Not ready to jump on it quite yet. My TSI
Right.
has not crossed up, but my momentum longer term on the daily is starting to cross up. And we are, yeah, it looks like it's a potential strong mover up to the upside. So
I agree. My biggest concern there is that we've got to get above the high from 4 days ago.
yes, right
The
there,
crucial event.
right.
Yeah.
And so, that high from 4 days ago is actually about almost 4%.
Yeah.
So you could almost make that one of your intermediate swing targets,
Right.
and just take a small profit right there.
Yeah.
Okay, great, man. I like all of those. I think we've done a good job this week of choosing a couple of stocks for people.
Yeah. Yeah. It's actually been a pretty good week.
Yeah,
For
no,
entry. We're getting back in. Yeah.
I started the week. I had 4 stocks that I was already invested in. Tried to get into a couple more. Wound up getting into one stock today with our premium members, and so we've been, all of them are up, somewhere between 7 to 15%, and so and they're hanging above the moving averages. So I'm
Yeah.
good with that. So
Yeah. It's looking very good.
and so, as I like to always let folks know, what we provide on this Friday is just top-notch analysis every week, timely, actual intel that clarifies, simplifies trading decisions so that you can, one, multiply your profits, minimize your risk. This week, my overall market outlook is we have mixed market again and again. So the market is showing some indecision, or is it just, kind of resting and going to go into the September, take a siesta in September so they can basically break out and move higher in October, November, and December. I think the last 3 months of 2020, there's going to be a lot of moving and shaking going on simply because, the election, a lot of other things are, happening. And so we'll see what happens. And so, Steve, thanks for the stocks.
You're welcome.
Hey, I always promote to people, learn to focus on the process. The profits will follow. I mentioned this last week. I basically have been reviewing the new edition of Dr. Alexander Elder's Trading for a Living book. And one of the things he mentions in there, he says, for people who are starting out trading or intermediate trading or even experienced trader, the biggest single reason why they turn out to be losing traders is they fail to utilize stop losses, and which is part of your system. I always find that very interesting, and that's the number one thing. They say, well, I'll catch the if it falls a certain amount, I will take action on the stop loss rather than putting the stop loss in as a mandatory hard. It's gonna, this is where we have to stop. And what happens is the stop loss gets, you blow by that, and then you get in that position where you're on your knees praying, dear Lord, please let the stock just get back to where I bought it for, and I will never not use my stop losses again. So, hey, question for this week. Will the stocks get hit in September? Hey, just leave a note in the chat there. Do you think they're going to get hit? And if you say yes, say real hard or not so hard. So go ahead. So Jeff, great. You took profits on Cisco. And so Barry asked a question about the 34-day moving average. What is that typically used for? Oftentimes it's used for intraday charts on for futures. However, it works really well also as kind of an intermediate between the 20 and the 20 and the 50-day moving average. And for whatever reason, prices sometimes stop right there and get a bounce. And I think it's becoming more popular and people are watching it more. So then you get a self-fulfilling prophecy. So if you are just joining for the first time on YouTube, please subscribe, hit the bell so you'll be notified of our updates. I provide some really good training on the YouTube channel, and that's Market Tech Talk. You can't miss it. Again, if you want my weekly trading plan, join us for the Power Ranked Elite. This is the autopilot trades, and it's time for you to engage autopilot. And all the reports I get from everybody who's basically utilizing this is they really like the service. Very clear on how to put the trades in and all that kind of stuff. So, hey, love to go to the beach today. I'll be glad when I can actually get outside and start being a little bit more physical. Aloha, trade well, prosper. Have a great weekend. Steve, thanks for joining us. And so mahalo. And as we say here, also, God bless everybody.
Take care, Dennis.
Okay. Thanks, Steve. Appreciate it, buddy.
Yep.
Goodbye,
Bye-bye.
everybody. See you next week. Aloha.